Welcome, everyone. Thank you. We're going to get started. So handing over to you, Nick.
Thank you very much, Emma, and a very warm welcome to everyone who's online today. We've had a terrific response to this webinar, which I'm not at all surprised. Extremely interesting area and a tremendous panel of speakers that we have today. I'll introduce them shortly, but before we do so, I've got the privilege of doing the acknowledgement of country. Before I go to that, I'm obviously not able to give a welcome to country because to do so, I would need to be, first of all, an Indigenous Australian, but specifically I'd need to be a Gadigal man because I am working today from the area of Sydney, which is traditionally the home of the Gadigal people. They're the custodians of this land. The welcome to country is something that I find a very beautiful part of our culture, part of our Australian culture that we get from Indigenous Australians. It's a tradition that's developed over thousands of years at quite a spiritual purpose, but also a very practical purpose, which I think is very relevant to us today. If you were passing on to the land of another mob, another tribe, you'd respectfully wait near the borders of that land, and they would greet you. The custodians of that land would greet you, and among other things, it had as I said, a very practical purpose. They would pass information to you. They would let you know where was a safe place to camp, where was good camping ground. They would let you know where you could find food, where there was a plentiful food supply for you to hunt or gather, where there was clean water, and also where the dangers were, where a river may be flooded, or where there were animals to be cautious of, or where the dangers lie. There is also even evidence that the custodians of the land may provide you with a guide to help you find your final destination or to pass safely through their land, which I think was a very apt, given that what we're talking about today. That you'd be foolish, and our Indigenous Australians learned over those thousands of years that it was very foolish and very rude to proceed onto land that you were not familiar with without the proper advice and guidance. So I find that very, very relevant to today, given that what we are going to be speaking about. And so with that thought in mind, I'm very proud to give an acknowledgement of country. I begin by acknowledging the traditional custodians of the land from which I'm joining you today. As I mentioned earlier, I'm here in Sydney on Gadigal land. I pay my respects to the elders past, present and emerging. I extend that respect to any Aboriginal or Torres Strait Islanders participating in our webinar today. I thank you for the great history which we inherit and build our great nation upon. Thank you. So I think in that same tradition, I have some housekeeping. Please keep your mics muted throughout the duration of the webinar. If you could please keep your cameras off. That will avoid distraction and help everyone focus on the speakers today. But please do be sure to post any questions to the Q&A. As I said, all four of our speakers today are incredibly knowledgeable. We're very fortunate to have their wisdom and experience. They could talk all week on the subject today. If you give them specific questions, they'll be able to answer those specific questions. So thank you very much for that. The session will be recorded, as will the Q&A. So don't be distracted by feeling you need to take notes at any time. This will be available for everyone after the event, and we'll make sure that copies come out in due course. So yeah, and please remember to follow, connect with PKF and our speakers. There are QR codes that will come up on the screen from time to time. If you scan those in the usual manner, you will receive all the relevant contact details, so you can stay in touch with everything we're doing here at PKF, but also our speakers organisation. So thank you, Emma. Speaking of our speakers, not sure about the fellow who's listed first. Other than hopefully introducing correctly, I won't have very much to say. Fortunately, we've got Leo and Eve from Pico for O'Connor Davies. I've had the great privilege of working with both of them for a number of years now across a great number of clients and some matters, some straightforward, some complex, and as well as being incredibly competent professionals. They're also great people, and I thank them very much for their time today. Heath and Chris also from EFA who've joined us today. Two great friends of our firm. Once again, incredibly knowledgeable, incredible assets to the clients and companies that they work with. I'll speak a little bit about EFA specifically when they come on to speak. But once again, I extend a great thanks to all four of our speakers for being with us here today, giving up their time so generously. So, to the topic today, moving to America. Now, the United States, fantastic country, great friend of Australia for many, many years, tremendously appealing market to businesses, great place to sell your goods and services, very, very large country, very populous country, very wealthy country, huge economy. As I said a moment ago, very, very welcoming to Australians. I've always found it a real joy to visit the United States. We are so well received there as Australians. Even when they can't quite understand my drawl, they smile and make me feel very, very welcome. But it's not somewhere to go lightly. It is also an incredibly competitive market. To say that I'm going to expand into the United States is, I often ask people, okay, well, where? The various states of America are very, very different in many, many, many respects. You do need to have a very well thought through strategy. You do need to have experts who've trodden that path many times before and can help you and guide you, because it is a terrific place for Australians to do business, but it's not an easy place for Australians to do business if you don't have the right people on your team. I often have said to clients, you know how difficult it can be to get through LAX airport when you're in a real hurry? Well, that's the easy part of getting to do business in America. So it's I think hence the reason why I'm very, very pleased to have such experts on the call today, because with the right support and guidance, it can be an incredibly successful journey into America, but it really does need to be done right. So hence our webinar today. So, as I say, certainly more than enough from me. We'll pass over to the actual experts. First of all, we're going to lead off with, I think Leo's going to speak first, and then Eve, our dear friends from Pico for O'Connor Davies. Leo, I might pass to you and you can step through your needs agenda.
Sure.
Thank you very much, mate. Always great to be working with you. Thanks a lot.
Well, thanks, Nick. Nice always working with you. We've had a long history together, had a lot of fun together, personally, socially, business-wise, and we're really honored to be asked to speak to this fine audience today. So good morning, good day to all of you joining us from Australia and Asia, and good afternoon, good evening to anybody else in the audience who's attending from somewhere else. So thank you for joining us today's webinar, Moving to America. My name is Leo Parmigiani. I'm an international tax partner with PKF O'Connor Davies, and I am the practice leader for our firm. I've been working in the international tax area for over 40 years now, and I've been helping companies move to the U.S. since the 1980s. Joining me today is my colleague and fellow international tax partner is Evgenia Belovskaya, and today together we work together to help businesses that are looking to establish and come to the U.S. We service people from all around the world, and I can speak probably for my colleague that we enjoy working with Australians probably the most. You guys are a lot of fun. You pay attention. You're serious in business, but you're also light in your personalities and your actions. So we enjoy that mixture because I mean, I know I'm that way, and I enjoy working with Australians. So today's session is designed for business that are either considering expanding into the U.S. or have already entered the market and are facing some challenges and the risks that could arise. Before we get to the technical content, I'd like to spend a few minutes introducing ourselves. I know the agenda is there, but maybe we go back to the slide there. So, well, anyway, let's just talk about some of the things. Go back to the agenda. I'm sorry. So we're going to be discussing entity structuring, federal and state taxes, which are very important, state sales tax obligations, which are becoming more important, payroll and employment requirements, permanent establishments, and finally the consequences of those people who make those decisions that are incorrect in the beginning. Even I have dealt with some serious situations where a group of Australians entered into a U.S. partnership, and if you don't know, that would cause the individuals to be directly taxed in the U.S. So we had 50 individuals that became U.S. taxpayers by virtue of the structure. So a lot of things that you need to know about before you enter the market. And as Nick said, the U.S. market is very diverse. I say, well, you should not think of us as the United States. We're the not so United States of America. We're just 50 countries that are united under a federal republic. So, but the good news is we can help you mitigate those risks, and they can be managed with proper planning. And although our firm is based mostly on the East Coast, we have a state and local tax team that covers all 50 states. So the fact that we're geographically east doesn't change the fact that we can service our clients in any part of the country. So as mentioned before, introducing the speakers, if you can go back there. Eve works extensively, multinational organizations, companies operating anywhere in the world. We're also part of the global mobility team. So that means that we're not just dealing with the companies coming into the U.S., we're dealing with individuals, we're dealing with investors, people coming out on investment visas and the like, and also big companies that have assignments everywhere in the world and coming into the U.S. A little bit about PKF. PKF O'Connor Davies is one of the largest firms in the U.S. Top 25. Now, 25 may not sound like a lot, but if you realize the regional differences in the U.S., 25 means you're probably 8 or 9 in your region. So that's where we are. And if you knock out the big four and some of the top tier firms in the world and in the U.S., we're right up there in the rankings. So we're one of the top firms. We have niche practices in just about every area. So I always say, if you want to know what we are or what we're like, there's PKF and there's PwC. So we're not much different than PKF. I think Nick will agree with that. We just deal with small, medium-sized enterprises and entrepreneurs, and that's the space that we like to play in, and we're the best at. So if you want to differentiate our firm from the big four and firms like that, we like to work with the founders, the people operating the businesses, and not the mid-level executives. And a little bit about, and also because we're part of the PKF Global Network, we also have the reach of being in 150 countries, over 400 locations around the world. And what that allows us to do, it allows Nick to come to us and us to come to Nick and his colleagues and just about everywhere in the world. We're constantly interacting. And when you work with PKF Network, you're working with one team. It's a seamless group of people that helps the client in a common cause. So when you're coming to the U.S., it's not about just knowing how to enter the U.S. There has to be a lot of coordination, and there's a lot of issues. We learn a lot of things about structuring in Australia that could affect how you structure in the United States. So that coordination is very important. If you go to the next slide, which well, the next two, we'll go right to the map now, I think. I think this highlights what Nick was saying, and he kind of stole my thunder. He didn't know I was going to cover this, but I think it's appropriate for an Australian to say it, and then I say it. This is the U.S. map. I mean, I'm sure you've seen it before, but to actually look at it and see all the states and the different locations, I'm not sure about the geography, but I've heard that going from California to New York is like going from London to Cairo, if you want to put it in perspective. And maybe you can correct me, but is it the same as going from Perth to Sydney? I'm not sure. I think it's similar, right, Nick?
Yeah, very,
but
very similar. I use the comparison regularly. Yeah.
right,
Yep.
and the people in Perth and the industries that are in Perth, it's the same as Sydney, right? I'm just kidding.
Yeah.
I guess I
Yeah,
make
no,
a joke.
it's yeah, but no, very, once again, very good comparison because yeah, they're the differences are it's a good example. Yeah, very, very different.
Right. So, for
Yeah.
example, Texas might be more equivalent to Perth, right? I mean, with the resources and all that, and then the finance and everything up here in Sydney, and then you got all the agriculture in California, et cetera, and other industries. Florida, it's its own world. So really, it depends on what industry you're in, where you want to enter. And I always hear, well, I've done business in New York and I've done business in California, so I know America. But I always tell them that they forgot the flyover country. And the flyover country is everything else you see in the middle. And the middle is everything from, I guess, Pennsylvania to Nevada and et cetera. And then there's Texas and Florida, which are whole other markets themselves. The U.S. has 3 time zones. I guess it's 4 time zones, right? And then if you count Alaska and Hawaii, I think it's 5 time zones. So it's a very diverse country in terms of industries, where the people are, and time zones. So being in one location doesn't mean you've entered the whole country and et cetera. So not to belabor that point, that's the point we're trying to drive home today is when you come to the U.S., the first question we ask is where, and what are you trying to do? What are you trying to accomplish? So it's not about just getting into the country; it's where you're going to locate. And the other area that you need to know about is there are incentives that the U.S. government, Department of Commerce, will offer you depending on where you want to enter the market. So if you go into a place like Arizona, maybe in the South, there are a lot of incentives that you get. I just went to a conference 2 months ago called Select USA Investment Summit. And basically we had 50 states and the Department of Commerce, a lot of people there providing incentives to foreign companies. So if you haven't gone in the past or haven't thought about it, you might want to think about sending a representative to that symposium summit. I think it's May of every year, and it's usually in the DC area. So I don't want to spend any more time from Eve. She has a dynamic presentation on the technical pitfalls, regulations, and rules. And the most important thing, the first question you have to ask when you enter the U.S. market is, what entity will you use to structure your business operations? And that's a good segue for me to invite Eve to the stage. So Eve, step up now, please. Thank you.
Thank you, Leo and Nick, for the introduction, and Emma for organizing everything. It's been a pleasure working with you so far. I'm Eve Belaski. I'm an international tax partner. I have been working, just being around a lot of Australians for many, many years now. And I've been doing this for about 15 years, assisting companies to bring their business into the United States and also exit the US and go back to their country. So with that, a lot of things are, everything that's happening in Australia right now, and especially the tax reform and Australian tax has been a hot topic over the course of the past 3 weeks that we've been following. So with those changes that are happening in Australia, we welcome any questions that people or business owners may have, especially those who are experiencing any changes in a capital gain tax treatments, anything related to negative gearing or anything related to, dividends or any other compensation, any investment disbursements that are happening as a result of having a business. So in terms of what entity you're going to pick when you come to the United States is all we hear all the time, especially from Australian businesses, everyone uses an LLC. That's the cheapest way to set it up. Forget about the tax. Once you have the LLC, you don't have to worry about anything. What the problem with the LLC is that what we found that the cheapest way to set up an entity in the United States is not always the cheapest structure to operate once you start generating revenue. To the point of some examples that we already mentioned earlier is when you have an LLC, and if you have more than one owner, and let's say you have 10 or 15 or even 2, your unexpected US obligation can come up to 37%. That's going to be just paid to the United States. So this is cash money that is going to pay to the IRS without you even pulling the money out of the LLC. Now, to fix that, there is a corporation, which is a lovely structure. All investors love corporations. So if you have long-term plans of potentially selling your business, so you want to build it for a couple of years and then sell it as a pre-grooming, we would always recommend to either make an LLC, a C corporation for tax purposes, or just create a C corporation. We've mentioned that there are many jurisdictions, 50 states in the United States, 41 states impose income tax. Pick the other 9. We have Delaware, we have Nevada, Florida, Wyoming. Some states don't have income tax. So this is something that we try to suggest when we talk about how to set up entity and where. Other things that happen is usually how do you go to put the money into your C corporation? Well, any corporation in the United States only has a few ways to take the money out. So whatever the way you're going to put it in, you got to think about how you're going to get this money out. So, and that depends on your long-term plans. If you want, you can loan, you can have, equity financing. That's very popular. We do want to make a point that there are differences between US taxations and Australian taxation. So if you're planning to, let's say, draw dividends out of your US company, franking credit concept does not exist in the United States. This is something where we say the corporation is almost 99.9 a double taxation entity where you're going to pay tax. If you're on the dividend distribution, if you are a non-US person, you also, either your company or Australian company or an Australian person, you also will be subject to a flat 30% tax. Thankfully, we have an income tax treaty between US and Australia, and that allows us to have a lower tax rate from 15 to as low as 5% on the dividend distributions if you are, the majority shareholder. So a lot of the times we want to make sure that you pick the entity that not only satisfies your business needs, but also satisfies your tax game later on. To talk about the difference between federal and state taxes, this is something that I get a lot of surprised eyeballs, eye rolls of our clients from Australia, because there's not such thing. In Australia, we don't, the concept of state jurisdiction imposing income tax is very foreign to Australia in general. So again, it's not one tax system. It's 50 plus tax jurisdictions. Income tax is one of the things that's going to be taxed on the state level. Franchise tax, gross receipt tax, registration obligations, everything has to be respected. And that all depends on what we call a nexus. A nexus is a connection to a local jurisdiction. Not only federal and state jurisdiction impose income tax, there's also local jurisdiction, like New York City, the beautiful, where I live and work, and then right now, that's the worst place to be in terms of my tax obligations. So locally, you also have to be very cautious about where you situate your business. You think an office in Soho is going to be pretty cute. It's going to be cute if you're in fashion industry, but be prepared to pay 3 levels of tax if you generate profit. Now, all the rules, and as we mentioned in the beginning, all the rules are different state-wise in the United States. Every state thinks that they're very special, so they want to create their own special tax laws. Physical presence is no longer a thing, and it's no longer a trigger for your state tax compliance. So not only you can create your nexus by having employees, by having a warehouse, or just selling, maybe it's IT services, a SaaS or PaaS or fintech or, services, anything that's not tangible. Not only you created by being physically there, you also can create that obligation as well as sales tax obligation by not even having been present in the state. So think about crossing state lines in the United States. It's almost like crossing, national borders from a tax perspective. You're going from one country to another, and the taxes are quite different. Sales tax obligations. This is something also, I've worked with Australians a lot. One thing they don't like surprises. Well, sales tax always is one of the items that surprises everybody. And it doesn't matter whether you do business in the United States using a US entity or you use your Australian entity to sell some, let's say, tangible product to US. Sales tax obligations, which is an equivalent of GST, is not a federal concept. It is imposed also by each state. We have about 45 states out of 50 that impose sales tax. Rules vary dramatically, jurisdiction by jurisdiction, so you also have to be aware of potentially creating a nexus in a state, depending on how much sales you generate to a particular state. How do you measure your sales? Well, this is the question of sourcing. I don't want to go too technical this early on, but if you have a tangible product, you essentially figure out how much of that product you ship to a certain location. So if you have, if someone paid you in California for a tangible product to be shipped to New York, you're going to pay New York sales tax, most likely. However, there are various ways to think about state exposure. Something I didn't mention before in terms of the state income taxes is what we have. We have protection from, we call it a public law, for companies that not particularly situated in any state. They're just selling to a state. And if they have that mere solicitation rule, then they may be exempt from paying income taxes. So it's important you have an advisor who knows what they're talking about when we're talking about SALT, and that's state and local tax. Similarly to sales tax obligations, if you have a fashion brand that sells to Saks or Bloomingdale's, then most likely it's going to be exempt from sales tax. But you have to know that. You wouldn't know that until you speak to somebody. One thing that has been in the news is, a lot of references to tariffs. I mean, tariffs has been around. It has been a topic as well in the US. It has been going out and in court many times. So there has been a lot of changes, and sometimes it changes daily and we're not even sure what happened. So we have US companies that are importer of records. We have foreign companies that are importer of records. If an Australian company is an importer of record of some product that you've developed and now you have to sell to your audience and to your customers in US, starting with next month, you have to make sure that you talk to your customs broker or someone knowledgeable about not being able to do that. There are specific restrictions that now are applicable to foreign companies that they cannot serve importers of record as importers of record anymore. So whether you want it or not, if that's your business, you may need to create a US entity. One thing that I want to mention, especially with payroll and sales tax, that there are similar in the way that they're all state-based compliance. And let's say your business didn't go as planned and something happened and now you just want to exit US, you want to close the company, or you don't even have funds to close the company. You say, okay, well, I'm bankrupt. There's nothing really that I can do. I'm just going to get out of here and, go to the beach in Sydney and have fun. So one thing that's going to follow you, unfortunately, is everything related to payroll and sales tax. That's a personal liability to a shareholder or an owner of US company. So be very careful when you either hire people or you start selling products that may be taxable for sales tax. Hiring people in US, it's also not that easy if you decide to do it on your own. There are other options right now. There are tons of companies that will help you to serve as a employee of record. Sometimes you can even originate US payroll by being in Australia physically, by hiring someone. You don't really need to be in US to do that. There are some global companies that can help you do it. Now, that does not avoid, you don't avoid the risk of pulling the company into US for tax purposes, but you do have some ease in paying people and hiring them. Every payroll is state specific. Just know if you hire someone in California, most likely you will have to file a Californian tax return as a business. Sometimes when people want to avoid that and they say, okay, well, it's not really an employee because I don't want to pay a lot of money that are related to any workers' compensation obligations and employment insurance obligations and everything else that the state imposes. I don't want to pay that extra money because, for example, if you want to pay an employee $100,000 as their gross wages, for them to get their net of about $80,000, you will have to pay out about $120,000. So for them to receive a net of $80,000, your total costs about $120, $130. So it's a lot of money and it's a lot of cash, especially if you don't have it in the beginning of operations. So sometimes people say, okay, I'm just going to hire an independent contractor. Be very careful about the independent contractors because that's more of a legal opinion of which classification should be applied to that individual. And if you don't apply it correctly, you will then be subject to US payroll taxes that you thought you wouldn't be. So it's important. Work authorization and immigration, that has been in the news, not only in US, but across the world, but in US specifically. Immigration is very important. It has been enforced in the United States. All work authorizations are looked at. People have to provide certain documents. We work a lot with globally mobile employees, so we see and pay attention to when their work visas start, when they end, and that helps us to advise the businesses on, what to do at a certain time. So one mistake and one of a key point here that I wanted to sort of summarize is that we try to deviate companies from using a test the market mistake because they make it by thinking, well, why do I have to involve, and put all my resources and cash and time in creating an entity that's really may not be very profitable, and I don't even know whether people are going to buy my product. So test the market is what I'm trying to make sure people understand that in US, yes, there are ways for you to test the market, but please talk to the tax advisor because it's going to cost you way less money to hire someone and guide you through the process rather than face thousands and hundreds and thousands of dollars in penalties and fees later on.
Yeah, and if they're not subject to tax, you're right. I mean, we could do the analysis. There's protective filings we could do. So if we believe that you're not subject to tax by virtue of a treaty, we could file a return. We can alert the IRS. If you don't tell the IRS that you're taking a treaty position, they could take the position that they'll give you no deductions against your gross income, and they won't even start the statute of limitations. So you'll be exposed to tax forever, and you'll be paying tax at a gross rate of 30%. So what Eve is saying is extremely important to make the right decisions in the beginning.
Exactly. And that would a great segue to a permanent establishment risk on our next slide, just to, scare you even more. Well, sometimes to try to avoid creating you're trying not to create a US company because you don't want to be involved in that. Let me try to use my Australian company and try to sell into the United States. Your commercial activity in general in the US can unintentionally create that taxable presence in the United States. So whether you want it or not, you may inadvertently are already there if you're selling. Although you might be able to, with proper planning, to avoid income tax. We do analysis, we help you to figure out whether you have nexus, you have presence in the US. Sales tax, though, is almost always stays. So that is something that's going to be there whether you want it or not if you continue to sell in the United States. So it's important to know when PE risk exists, because a lot of companies often assume if we don't have a US company, so we're not taxable. But you have the activities of employees, you have activities of dependent agents, sales personnel, all of those activities can create PA risk. And especially if you are the business owner who is negotiating contracts and from time to time is traveling to California or New York, has this repeated business travel, you yourself can create a permanent establishment by signing a contract with the U.S. customer. So you can create U.S. tax exposure without even realizing that you've, officially entered the U.S. market. So that's something that we want to bring to your attention, because we've seen way too many times the stories where we had Australian companies coming to U.S., creating corporations, don't file tax returns for 2 years, but having intercompany activity between the non-U.S. person, which is who is an Australian owner, and the U.S. corporation. And when we have to file those corporation tax returns, and dormant companies are still required to file U.S. tax returns in the U.S., we have to disclose those intercompany activities with the foreign related parties. If we file a delayed form, 100% you will be hit with $25,000 penalty for each unfiled form. So we had an example where we had 2 years, was $50,000. It's a public company in Australia. And for some reason, they didn't have proper advice. And they came to the United States and never filed that form. And we fought the penalties. We know how to do it. It wasn't tough. It wasn't easy. It was quite tough to deal with the IRS agent to fight those penalties. But we were able to mitigate $50,000 penalty down to zero. So that was very, very valuable output for our client. And now our clients appreciate us and they know the value that we bring. So with that, I wanted to summarize our scariest part of this presentation and turn it over to my colleagues from Australia Export, Christopher and Heath.
Thank you very much, Eve and Leo. I think certainly the strongest point there is speak to people early. Eve and Leo, incredibly personable, and getting guidance before you head abroad. Obviously, we've touched on the importance of having local knowledge and having people who can help you understand the very complex American market. Also extremely important to have the right resources supporting you. As I said a couple of times, we're very pleased to have Chris and Heath from EFA on the call today. The EFA support Australian businesses and government objectives through the provision of commercial finance. It's often a little bit misunderstood what exactly the group does, but their purpose is to support Australian trade and investment in Australia's national interest. Having strong corporations, strong exports, strong exporting businesses is in the national interest. So we're very fortunate to have EFA that are able to provide those resources and support. They predominantly offer debt finance solutions in the form of loans, bonds, and very importantly, guarantees. I think either Heath or Chris may touch on that specifically. But they also have the capability at times under certain circumstances to provide insurance, underwriting, and even equity. A very, very significant resource. And as I say, Australian businesses are very, very fortunate to have access to their support under the appropriate circumstances. So another group you should make sure you engage with early to make the most benefit from it. Look, as I appreciate them being on the call today. Chris or Heath, sorry, who's going to lead off? Chris, you first up. Thank you very much. Cheers.
Thank you, Nick. And thank you for the intro there. We're very pleased to join and identify how we can support PKF customers and others who have attended the call today. I'll just conscious of time, so we'll jump straight into it. And I think an overview of EFA is an important place to start. So building on what Nick said, we're Australia's export credit agency. We actually fall within the wider DFAT, or Department of Foreign Affairs, umbrella, and Austrade, which some of you on the call may be familiar with, are our sister agency or cousin within the government framework. We're a commercial lender, and that means that we don't do grant funding, and we don't lend for businesses that are pre-commercial, or typically don't lend for businesses that are pre-commercialisation. So what that means is when you're a business that's at a stage where you're starting to generate cash flows, you're typically through a break-even stage in your business cycle, that is a good time to engage with EFA and understand how we can support your business and your growth. Our remit is very broad. We work from anything from small businesses turning over 250,000 and up, all the way through to large ASX listed customers. So, and everything in between. So the range of support and financing that we have is very broad. And we would say that for any exporter or aspiring exporter, before you're told no from a bank or another lender on your goals, we'd say, have you spoken to EFA and understood how we can support you? The type of financing that we do, building on Nick's point there, loans, bonds, and guarantees. Later on, we'll share some specific customer examples of cases that have all gone to the US, and there's some really fantastic stories there. But as we step into the next slide, the important thing is when we think about the customer story and who we help through a number of different ways. And the first one, it would be around a direct exporter. So a direct exporter would typically be an Australian business that is producing goods or has a service, and they're either shipping that good from an Australian port, or they've got IP and they've added value to a good. It may have been manufactured outside of Australia, but its IP is owned by an Australian company. It's ultimately controlled, design and so on by an Australian company, manufactured and then shipped. So that's a really important one, because when we think direct export, it's not just a good leaving from an Australian port. It can be a good that we're an Australian company, have generated the IP, done contract manufacture outside of Australia, so for example in Southeast Asia, and then shipped directly to the US. And that's a story that when you hear the words Export Finance Australia, obviously the name's on the tin, but identifying some of those different scenarios where an Australian business is involved is really important to think about. So whenever there's Australian goods or an Australian business selling in another jurisdiction, we would say, have you spoken to us? Have you considered if we're the right finance solution to help you? And particularly going to the US, I think if I build on some of the points from Eve, it's a fantastic example of the complexities in the States. And when you look at the West Coast, 3 of the 5 largest ports in the US are on the West Coast. And that means that Australian businesses typically sell into California, and they often have third-party logistics providers into California. And I think straight away you can see from the story that what Eve was explaining, that it can become quite complicated from a tax liability perspective quickly. But notwithstanding that, we would be someone any business should think about as a finance partner, and importantly, a finance partner that work with your bank. Our role is not to push the major banks or any of the other lenders out of the market. Our role is to support Australian exporters. And it typically means a business will have a good banking relationship, but they may need some additional funding and a little bit more stretch in order to obtain the funding they need to export. So I've spoken there on direct exports for one, but the other piece is also export supply chain. And I've highlighted on this slide here, we've sort of focused on manufacturing on this slide, but I would emphasize that the range of industries that we support is very broad. It is mining. We do an awful lot in the mining sector and the mining supply chain, agriculture, manufacturing, defence. It is a very broad segment of the Australian economy that we would support and goods and services. One area to think about if you're not a direct exporter is if you're in the export supply chain. And the export supply chain is an interesting point because, again, it's not something that's naturally comes naturally when you hear the words Export Finance Australia. But the export supply chain is if you are producing goods that are sold into a manufacturer who is then selling into the US. So an example of that, and I will, just for simplicity of example, if we look at the food production chain, supply chain, and I'll just use milk for an example, there would be a cooperative or a pasteurization process and a number of farmers selling into that cooperative. The farmer, although they're not directly exporting from farm gate, because they're selling into a business that is then exporting, we would think about that as the export supply chain. And a similar example is also in industries like civil works. So for example, in the mining sector, if a business is selling mining equipment, we've had customers making sensory equipment for mining vehicles to get around the mine site. While these were actually located in Australia, we looked at that as export supply chain. Now, the great thing there is that these Australian businesses can sell locally, prove up, get their products established, and then they could be selling directly overseas into something like the US market in short time. But I'd sort of highlight here, manufacturers, we do see a lot of manufacturing businesses going to the States. If I look at more broadly across EFA, this year we'll do around 1.5 to 2 billion financing, and there'll be around 500 transactions within that. Manufacturers will make up a reasonable share of that debt and that opportunity. The next slide that we have touches on some of the products that we have. Now, typically for a manufacturing business, loan or debt financing is required, and we would look at financing loan amounts. It could be anything from 100,000 through to 50 million. It just depends on the business, what their requirements are, and what is needed to support them get into an overseas market like the US. One area I will touch on is the bonding. So the word bonding, it has different meanings. In our world, we think about it as a bank guarantee. There's times when you may, as a business, you may be asked for an advance payment guarantee or a performance guarantee or a warranty guarantee as part of contracting. That's an area that we do a lot in. Our bonding product starts with a 0% cash cover. So that means it's a great way for a business to keep liquidity within their business, but still be able to fulfill an export contract. And the third item there is guarantees. In this case, slightly different from a contract guarantee. In this case, this would be where we would provide a guarantee to your bank. So for example, if you're with one of the majors and that major bank needs a little bit of extra support in order to get comfortable with lending, there are scenarios when we would provide a guarantee to that bank and effectively take some of the risk from that lender. But with that in mind, we've now got 3 examples that we're going to step through, and I'll pass to Heath.
Thanks, Chris. Appreciate that. And I'll go through these relatively quickly given time. I just want to touch on 3 case studies of businesses that we've helped. But firstly, reflect on, Nick, your opening point where you stated that you need the right people on your team. You'll see behind the backgrounds of both Chris and myself, our motto, which is no one takes on the world alone. And it's absolutely true. I think it's important as we go through these case studies to remember that not one of these businesses have achieved the success that they have alone by having the right partners across accounting, legal, finance, and trade, and we all come together. So I think this is a perfect way to sort of talk through 3 examples of real businesses that we've been able to help alongside the other partners that they've relied on for their business expansion. So MyVenue is a point of sale software business that really specializes in the sports, entertainment, and hospitality sectors. So where you might now be sitting in the stadium watching a game, ordering food either from your mobile or from the self-serve kiosk, that's quite likely a MyVenue solution, an Australian business that has expanded. When we started speaking to MyVenue, they were successfully selling to Australian venues, entertainment, and both sports venues, and had just acquired and successfully won a contract to deliver their solution into a stadium in the States. So we were able to fund them in terms of the costs through an export loan, where they've been able to deliver that contract, but also now additionally, they've then been able to move to the States via the use of that small business loan. And now they've been able to branch out through multiple stadiums across America, where they continue to expand and scale their product. A real great success story. And we see them now focused on not just the US, but that's then opened up Canada and the UK, as well as their continued focus on Australian venues as well. So a small business that got a contract offshore, that didn't have the ability within their current financial institution to do so, and we were able to work alongside that. We moved to the second, and thinking about manufacturing businesses that we see a lot. Thomas Global Systems is a manufacturer of instrument panels. So instrument panels are in airlines, Defence Force, and government equipment around the world. So your instrument clusters would be a great example of what they specialise in. Thomas Global came to us alongside their existing Australian bank, so working very closely with their financing ecosystem, and they secured a long-term supply agreement with the United States. And so we were able to provide, alongside the financier, an export contract loan that gave them working capital to be able to fulfill that contract, and deliver on actually a number of contracts throughout the US. Thomas Global now sell globally from both their manufacturing plants in Australia, in Sydney, as well as Irvine, California. And if we go to the third, this is an example of, so we've gone through two quick examples of loans, and loans that have then gone into support for overseas direct investment and physical footprint. This example here is an Australian business that won a contract directly with the US Department of Defence here in Australia. So this comes back to Chris's comments around export supply chain and how we recognise overseas revenue or overseas customers as export. So CC Pines is a family-owned construction business and specialises in complex projects in remote locations, in particular modular construction, where they do construct and also ship around the world. But they won an opportunity to support the US Department of Defence in delivering plans for a RAF base or a US Air Force base in Darwin in the north, Darwin and Tyndall in the Northern Territory. What's unique about this is when we think about not just loans, but bondings or contract security, the requirement for CC Pines, and is often a requirement when dealing with US firms around contract security, was a surety bond was required. Now, there were two things that were significant with this. The surety bond amount was 200% of the contract value, which is, if you're dealing through your banks or through a surety provider, can be quite a significant impost on the cash or security of their balance sheet. So CC Pines is, and their amount that they were after was rather small in comparison to the large surety providers that we have here. So we were able to guarantee that surety to an Australian or a US, but an Australian-based surety provider to give that contract security so that they could win and complete that contract. In surety, what we normally see from our side is that the requirements range between 100 to 200% of contract value. So where we differentiate ourselves amongst other providers is that we will look into the contract risk and really heavily dive into their capability, capacity to deliver. And we backed CC Pines on this by providing that 200% surety bond, or the guarantee for that to be provided, so that they could complete that contract. So in closing, it can be when you've got your first interaction might be sales from Australia. It may then lead into direct investment and footprint on ground, or it may be that you're still dealing with a US or overseas buyer, but doing work domestically. And these are all just different examples of how we can assist. Thanks. Thanks, Emma. I think that's the last. So
thank you very, very much, Heath and Chris. I particularly enjoy, as much as we've worked together, and I feel I have a good understanding of your organisation and what you can do to help help Australian businesses. Each time we speak, I do see a different perspective on that. And that third example you used was something slightly different to what we've ever spoken about collectively. So look, thank you very, very much. Now, I am conscious of time. I know I said that we would get to Q&A, but as I say, being respectful of everyone's diaries, what I might do is just summarize. If everyone can see on the screen some of the top takeaways from today. What we might try to do is when we come back to everybody with some of the questions that have been filtered, because there's some very, very interesting questions that have come through the chat both beforehand and while we've been speaking. I don't want to miss those, but I also very much want to do them justice. So I will apologise in advance that we haven't been able to get to those today. But what we will do is we'll make sure that we get some summaries on those out to all the attendees today, and to some of the people who couldn't make it today. But what I will do is just to recap some of our top takeaways from today. Get things organised in advance. Structuring decisions made up front. Making the right decisions is very important because it's very hard to undo these things later on. The US, we cannot overemphasize how complex it is. Other than language, going to the states of the USA are far more disparate than the countries of Europe, from my experience. So if you realise that there's a difference between England, France, Germany, Italy, etc., please note that other than language, there's probably more disparity between the states in America than the countries of Europe from a business context. So get it right. Sales tax exposure has been touched on today. That can arise very, very quickly and unexpectedly. Hiring in the US is complex. Do it the right way. Get the proper advice. Repeat that early planning is critical. But coming into the positives here, don't be frightened. Don't be scared. Don't be appropriately cautious. But there is support available. We've heard from Chris and Heath, government-backed funded support here in Australia, and when you arrive in the US, get the right people on your team, engage with them early. There is support available, and there are some fantastic success stories, as we've heard three of today. That funding, whether it be direct funding or support, other forms of support, can unlock the huge commercial opportunities that we started the webinar speaking about. And just one more time, for good measure, get it right from day one. The experts are available. We've heard from 4 of them on this call today. We here at PKF are always here to help. I'm certainly not the expert, but I'm fortunate enough that I know who the experts are and I can get people in touch with them. Get it right from day one. Have the right people on your team and make your expansion into the US the huge success that it can be. Once again, very conscious of time, so apologies. We won't get to the questions today, but we will try to come back to them. Anything that you have a specific burning question, as we've said a few times, everyone's contact details have been on the screen. You can certainly, I'm not hard to find. I can get the questions to the experts. We can get some answers to you. Thank you very much again, everyone, for your attendance. Thank you one more time, Chris, Heath, Eve and Leo, our experts today. great sources of knowledge. Really, really appreciate your time today. And thank you very much to Emma and her team for facilitating and organising this this webinar. Thank you very much and good day, everyone.
Thank you. Have a good day.